Afrinvest, a wealth advisory firm focused on West Africa and active in four principal areas: investment banking, securities trading, and asset management, launched the 2023 edition of its Nigerian Banking Report. It brought together financial experts, banking industry leaders, government functionaries, and other economic stakeholders. The MD of Afrinvest Consulting, Mr. Biodun Keripe, in his presentation of the 2023 Nigeria Banking Sector Report, said to get Nigeria working again, institutional reforms were critical for the country. He also called for credit expansion, derogation of capital control measures, and the right communication of policy directions to the financial markets.
Over the years, we've been talking about policies, exchange rate, subsidy, and all of that. Now it's about focusing on institutions. We've seen an administration that has come in that started implementing those policies we've been yearning for years. Now, can they focus on institution also? Law enforcement, we all know what it is like. We need a reform there. I'm going to come to electoral institution, but I won't spend time there. I'll quickly come to judicial and legal. I will not spend time there also. I'll come to education. Education, yes, critical. Politics and governance, social cultural. Social cultural speaks to family lives, family values. How do we institutionalize those values we had in those years when most of us, some of us, young, the Gen Z, Gen Millennial, no, were not born? Those values, we need them to come back. How do we get this administration to instill that as a way of life? Prioritize credit expansion to critical sectors to boost local outputs. Anchor market rate to the MPR. That means do not allow MPR. Do not just fix or set MPR at levels. Look at what's happening in the market to determine where MPR should sit. Look at liquidity levels, gauge market sentiment as an institution, as a central bank, to make those policy decisions. Restrain from quasi-fiscal intervention. Quickly to exchange rate management. That grammar is big. Abrogate capital control measures. I don't even know what it means. But it just says that, hey, all of those things we've been doing around FX in the name of we providing stability, and what we're actually doing is we're controlling and stifling flow of capital. Stop it! Next one, improve communication of policy direction to the market. I think this new CBN administration is somewhat doing, or is starting off on a good note with that. Return to an orthodox monetary policy regime. I wouldn't flog on that. It's clear. Restore the CBN's independence and transparency. It took us so many years to see the final accounts from the CBN. We need that transparency. It boosts confidence in the market.
The managing director of the Ministry of Finance Incorporated, Dr. Armstrong Takang, representing the Honorable Minister of Finance and Coordinating Minister of the Economy, Mr. Waledu, in his remarks asserted that the establishment of the National Asset Register will improve revenue streams and provide liquidity for the Nigerian economy.
So some of the steps that we're taking is around forward sale transactions. Again, we're not mortgaging our future. It is just about the time value of money. The right times when you have assets that, especially oil and gas assets, that are depleting in value over time. I believe is that we can unlock liquidity by putting some of those assets and creating liquidity now, while not necessarily losing those assets. The second is also around that liquidity is to attract international capital flows in advance using funding arrangements. MOFI has assets that are worth tens of trillions of naira. Unfortunately, most of those assets, over time, we have not really leveraged on those. Anybody in finance knows the value of leverage. A lot of those assets really represent our own equity. We have not used that equity to leverage debt and other types of capital flows. We're beginning to use some of that. We believe that those assets represent significant opportunities for us to be able to unlock liquidity by putting some of those upfront. And in most cases, the cost of that liquidity will be a lot cheaper when you use assets you own at the moment rather than unsecured debt or using sovereign debt. We have significant real estate assets both at home and abroad that are not yielding any revenues for us and are not even used in any way. Utility value is very low. That has to change. We have oil and gas assets that have been performing suboptimally for decades. Licenses were given to people 10, 15 years ago. They have not invested a single dime in developing those assets, whereas you have other investors that are looking to invest in those assets. We need to go back and determine how best to sweat those assets, to optimize those assets, to deliver value for us. It will be cheaper for us to do that than relying on external borrowing.
The event featured a robust panel session that discussed the theme of the Afrinvest 2023 Banking Sector Report launch.
With COVID, the world has realized that Africa is resilient. The talent is there with the youth population, with educated workforce. If you look at Nigeria today, I always say English is our first language. We all speak our languages, but we speak English, and that's really should be considered our first language, which is another advantage we have. In Nigeria, the time zone, for instance, is more favorable when it comes to outsourcing than India and Philippines, that are the biggest. So how do we position Nigeria? One thing is, we talked about security, and everybody that has spoken before me also touched on that. But how do we solve the problem that causes insecurity, which is lack of jobs, right? Provide jobs for the people that needs it. They go to university, they come out without a job. They are seeing their relative in the village that cannot go and educate themselves. How do we fund all that? And then how do we upskill and then showcase Nigeria as a readily available market?
I think we must understand that making Nigeria work again, which is a theme of this gathering, to a large extent means making the subnationals work. I think that we should take away from here. And making the subnationals work to a large extent means making the engines of the subnationals, which are the civil and public services of these subnationals, work. I think that one of the things that we perhaps are lacking is the fact that we need to create a platform, for interaction and interface among the subnationals. For instance, what we're doing in Edo, the revolution that is happening in Edo, in all of the facets of human endeavor, particularly in the civil and public service, how much of that revolution, how much of that work are other states leveraging? And how much of the work that other states are doing to improve on their fortunes, on their economy and their public and civil services, how much of that work are we leveraging? And what is a platform that is available, I would say, at the highest level, where governors can talk among themselves as to what they are doing and how much efforts, are being made in some states that will help other states grow.
If we invest in the rural economy, if we invest all our resources in raising the standard of the infrastructure in the rural areas, I'm sure we would go to where we are heading. Definitely, for instance, if PiggyVest is to reach out to the rural areas, there is a lot of funds trapped there that is cached, that can be converted, and then the banks would actually be ready to even be involved.
We have so many needs that everyone is aware of, starting with security and jobs and all infrastructure, from roads to clean air to clean water to wastewater to healthcare. We are so deficient in all of those areas, and it's well known. And I go to many conferences like this, and I talk to many people about capital investment. We need massive capital investment, and you can't deny that. When you see something that's deficient, it is natural to come to the conclusion that if we make capital investment in this area, we'll bring it up to this level that it should be at. But first and foremost, we have to ask ourselves, what is the path? What is the path to make Nigeria great? Clearly the resources, the human resources, I couldn't agree with you more, the natural resources this country has, the population is an asset. It is not a detriment, it is an asset. China grew on the basis of its population. China's economy grew on the basis of its population. But I have never seen an economy in the world that is more dependent on oil and gas revenues than Nigeria. The only thing that's comparable is really Iran. When you find oil resources or gas resources, whether it's in Saudi Arabia or West Texas or Siberia or wherever it might be, if the cost of production is lower than the market price, you'd produce.
Mr. Akichoke and Mr. Abiodun Keripe speak further on the report and the key takeaways for policymakers and key players in the banking industry and economy.
I think the key highlight of the report is really when we look at where Nigeria has come from in the last 8 years and seeing some of the macro factors that's driven us to where we are today. You can see that from the biggest challenge that Nigeria has is really how to get its revenue numbers up. You saw the stats we showed you that today we still have debt service to revenue at effectively 99%. And then you ask yourself, everybody talks about the 87 trillion naira of debt that Nigeria has. Quite a lot of that has come from the ways and means. About 23 trillion naira are dead in the last 8 years. But for Nigeria to move forward, as the minister has said, represented here by Dr. Takang of Mothi, is really for us, Nigeria, to think about what he owns as well, not what he owes. And from the point of view of Mothi, you can see there are many government assets that are available that can generate revenue and income that today are quite moribund. They're just staying there idle. So for us to move forward, we need to kind of revive all these assets, NNPC, NLNG, even all the airports in Nigeria are owned by Mofi, but they're not even included in the asset base of Mofi because they're not corporatized. To bring all these assets under a structure where we can see what they have, what we have, make sure we have the governance framework to make them work for our Nigerians, and then begin at that moment to see how to then generate that revenue and momentum, and then create possibilities for upside going forward. So fundamentally, it's getting Nigeria to work across all facets, not just within the sort of business environment, but through agriculture, as we talked about during the panel, through human employment, human capacity, because Nigeria's biggest resource still remains its human capital. And there's quite a lot of potential that's not been leveraged on it. Build the technology infrastructure to get Nigeria more efficient, as Edo State has exemplified here through their head of service, showing that if you build the fiber optics and build the systems, you can actually run an e-government that works. See what we can do further in the oil and gas sector. We heard about it from the speaker, as well as what we can do from the fintech point of view, as the MD of Piggy Events has so eloquently alluded. So there are quite a lot of dimensions, but you can see all the possibilities are within our reach for us to turn them around and make them positive for the benefits of all Nigerians.
We've titled the report Getting Nigeria to Work Again. And that's because we're coming from a place where we're already feeling the impacts of certain policy decisions. And we're now saying that in getting Nigeria to work again, there are new policy decisions that have to be taken. The implementations also have to be pursued aggressively. This new policy decision somewhat overs around mostly transforming institutions. So institutions around the legal system, the judicial system, the financial system, ensuring institutional stability, right, such that Nigeria on its own can begin to work. Now, when you have your institutions well structured, they are self-governed, then that way those institutions can operate without the influence of externalities. So that's what we're saying. And then for the broader banking system, we're saying with the new CBN administration, focus must still be maintained around risk framework for the entire banking system. Focus must be maintained around ensuring that the system is adequately capitalized, given all that has happened around the foreign exchange market, and the fact that when you benchmark Nigerian banks' capitalization with global peers, they are less competitive. So what does this then mean for the CBN? What sort of policy actions should the CBN take in response to such a scenario? So this is pretty much what we're saying with this report. In terms of metrics and dynamics that has changed or that will be changing, is first of all, if you look at the monetary policy environment, we keep focus on the MPR. There is a need for them to anchor such a metric to market rates, to the market basically. So that's one key metric that has to be mark to market or anchored on the market rather. And that's one key metric that we cannot lose sight of because of how much it feeds into the banking system, ensuring profitability for the system, ensuring stability, and also ensuring the quality of risk assets. Because when your interest rate environment are not stable enough, it has negative impact both for risk asset creation and in terms of the quality of the risk asset that can be created in the first place.
The major talking points from the 2023 Afrinvest Nigerian Banking Report launch is the need for a coherent economic policy that provides the right signals to the financial market and attracting significant foreign direct investments that can boost revenue, improve liquidity for the banking sector, and unlock economic opportunities for Nigerians.